Hi, everybody. This is Alan Elman, the Blue Collar Investor, and welcome to this BCI podcast number 136, titled Rolling Down with a Few Hours to Expiration. We're going to be using a real-life example taken from one of my portfolios with Energy Select Sector Spider XLE trading on the New York Stock Exchange. Now, most of you know that an integral part of the BCI methodology is to be prepared with our exit strategy arsenal after we enter a trade, whether it's covered call writing or selling cash secured puts. Now, when we're doing covered call writing, if the share price declines, we always have our buy to close limit orders in place once we enter our covered call trade. So we buy a stock, we sell the option, and then we enter our 20%, 10% buy to close limit orders. And that will help guide us as to when to close the short call position should the security value decline in price significantly. Now, one of the inquiries I often receive is, what about a contract that's about to expire? How long do we leave that 10% buy to close, good till canceled limit order in place? What if there's only a few days left to expiration? Can we remove it? In other words, because the time value component of these premiums are approaching zero, will there be opportunities to generate additional time value profit or mitigate these losses by leaving that 10% buy to close limit order in place? Well, in this particular podcast, I'm going to show you an example of when I actually roll down with only a few hours remaining until contract expiration. Now, let me first talk to you about removing that 10% buy to close limit order. Can we remove it? Well, the answer is yes, we can, as long as we can carefully monitor our positions through contract expiration, 4 p.m. Eastern Time on expiration Friday. If that's not possible, then we actually should leave those buy to close limit orders in place, because then we can get a text message or an email from our broker letting us know that the threshold was reached. We can then log into our account and have a look at rolling down opportunities. I'm not saying we're going to make a fortune, but if we can mitigate those losses even a little bit, well, then over the long run, it will have an impact on our portfolio success. Now, for those of you who are also watching this podcast, I'm now showing a screenshot of a typical trade notification that we might receive from our broker. And in this case, it will let us know that we bought to close, the number of contracts, and the price. In this case, it was 3 cents. For 200 shares, it was $6. And so we know that the buy to close threshold was reached. We still own the shares. We no longer have an option obligation in place. And we take a look and see what our rolling down opportunities are. Here's a real life example now with XLE taken from one of my portfolios. On April 16th, the 10% threshold was executed for 4 contracts. It was for the 49.50 strike, and it was executed for 3 cents. So $3 a contract. Now, these contracts were then rolled down to 48.50 strike for 14 cents, and that resulted in a net credit of $44. Well, that doesn't seem like a very big deal, $44, but it was for about 3 minutes worth of work. Once I received notice that the contracts were bought back and the short calls were no longer in place, well, I just went to an option chain. I looked at a lower strike. It was still out of the money compared to the current market value of the stock, and I netted $44. You do this a bunch of times, and it will eventually, over years and decades, have a major impact on our portfolio wealth. This happened to be the second roll down I did with XLE in that April contract month, 2021. Now, I didn't put a buy to close limit order on it because there were only a few hours left to contract expiration, and I was able to monitor the trade through those last couple of hours. I'm now showing a screenshot for those of you watching this podcast, and the screenshot is exactly what I received from my broker, showing the buy to close on 4 contracts at 3 cents, and then the sell to open for the 4 contracts at 14 cents, netting a $44 profit. So to summarize, exit strategy opportunities decline because of theta, time value erosion, as we get closer to contract expiration. That is a given. That doesn't mean that the exit strategy opportunities are totally eliminated. And we always want to be in a position to protect ourselves if we can't be in front of our computers monitoring our trades. So these 10% buy to close limit orders, as contract expiration is approaching, could be very valuable if that's the case. Now, in general, preparation, we all got to be prepared after entering our trades and taking advantage of all exit strategy opportunities, even the ones that take place in the last hours of a contract, are major factors in becoming elite option sellers. And what we all want, maximizing our returns to the highest possible levels. And this XLE example was one that I thought would hit home with a lot of investors who feel that maybe having that 10% buy to close limit order in place at the very end, the last couple of days of a contract, is not necessary. I always, at these podcasts, mention our pride and joy, our best and most comprehensive educational product, the BCI package. Has 18 components, 6 online video courses with downloadable workbooks, 6 calculators created by the blue-collar investor and found nowhere else, 5 of our best-selling books in ebook format, and our annual 13-month premium membership where you get 4 reports of eligible option selling stocks and ETFs, along with a huge educational component, which right now has over 200 training videos. How do you get to this package? Go to our website, www.thebluecollarinvestor.com, and click on the link at the top that says BCI package for more information, a video describing the package, and an opportunity to make the purchase. These items can be purchased individually as well at www.thebluecollarinvestor.com/store. Ladies and gentlemen, I want to thank you very, very much for taking the time to listen to and or watch this BCI podcast number 136, rolling down with a few hours to expiration. Folks, I hope you enjoyed this presentation, and more importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.